Welcome back to Mining Stock Daily, everybody. Trevor Hall here with an update from Newcore Gold and CEO Luke Alexander. Newcore Gold is a partner of the podcast. They do trade on the Venture Exchange with NCAU and on the OTCQX with NCAUF. And I continue to be a shareholder of the company. Luke, it's been a little while. Welcome back to the podcast.
Good to see you, Trevor. Hope you've been having a good summer.
Yeah, you too. I appreciate that. Summer's been busy and really good, but I was happy to get Newcore back on. Newcore's back in the news with more drill results here. Been somewhat of a quiet summer. Last time I think you and I chatted was after the financing earlier this summer. And these are the first drill holes I think you've published in quite some time here. They're coming out of the Nyam deposit, but it's a little bit interesting of a strategy here at Nyam. You're going after a higher grade sulphide mineralization in the upper portions of the sulphide there. And it seems like you were successful in hitting that.
Yeah, thanks, Trevor. So as we've kind of discussed in the past, we've got really a few different strategies from a drilling perspective on our project. So we've got a very well-defined oxide resource near surface, kind of from anywhere from surface right down to 100 meters. We've outlined a heap leach project, which encompasses a lot of those oxide ounces. But then one of the things that we're very excited about, and we've talked about a number of times on your show, is the fact that we've started to see higher grades within the sulfides below that initial oxide mineralization. If you look at other deposits along the Sulphide-Bibiani belt, where you start to see them really increase in grade and grow in sizes, as you start to drill deeper, start to identify those shoots within the sulfides, and then start to prove them out. So the results that we've put out this week at Nyam is further high-grade results from the Nyam deposit. That's where we've had some of the most success from a higher grade perspective. We've identified two primary shoots there that are plunging at depth, and we've put out some additional high grade results, which are follow on from the previous results that we had. So in terms of the specifics, 3.28 grams over 11 meters. But then within that, we're seeing a higher grade portion of 6.57 over 4 meters. So these are underground mineable type grades, and that's what we're ultimately looking to prove out with some of this higher grade drilling that we're doing.
What was the depth of that higher grade hit there, that 4 meters of 6.5?
That's down around 350, 400 meters is where these holes have targeted. So it is a good question, because one of the things, again, those are relatively shallow holes when you look at, deposits around the world, and specifically on the Sulphide-Bibiani belt. If you look at, Newmont or Bibiani or Chirano, I mean, they're down anywhere from 500 to 1 kilometer below surface. So we haven't even drilled down to those depths yet. But what we're typically doing with our drilling is we're stepping out and continuing to systematically chase these veins to depth. So that's what these results have done, is they're follow-on drill holes from previous ones that were a little bit shallower than these.
Yeah. Luke, you and I have talked about this many times before, but compared to a lot of the other mines in operation on that same belt, I mean, your exploration is almost very replicable of what they were doing during their exploration seasons and years prior. It was a while ago. But, you're not remaking the wheel here. It sounds like this area is given exactly the same type of exploration potential as they were seeing at Toronto up in the belt.
Yeah, so I mean, again, along the Sulphide-Bibiani belt, 50 kilometers to the north, we've got Chirano, we've got Bibiani to the north of that, and then you've got one of Newmont's two producing mines in country, the Ahafo mine. I mean, those range anywhere from 5.5 to 20 million ounce deposits. One of the things we're fortunate is that the oxides are typically thicker at our project. So the PEA that we put out that ultimately outlined a heap leach project. But again, these set of results that we've put out, including the met work, really highlight that potential for, the higher grade sulfides and for us to grow those ounces over time. If you look at the resource that we put out earlier this year, we did put out as part of that our first ever underground resource, so about 136,000 ounces of underground material. Again, that is not a mine today, but what it is for us is it's a proof of concept. That 136,000 ounces is spread across 3 different deposits, and about just under half of it comes from our Nyam deposit. So again, these results that we've put out today are further confirmation of that high grade and the potential to continue to grow it over time.
All right. Well, and no mine is complete without metallurgy and test results and recoveries. So let's talk about that. You did also release results of metallurgical testing there at Nyam on this sulfide material, averaging 91.7% cyanidation recovery, which really good, Luke. I mean, really good. It sounds like there's more met testing to be done, but my question is, how does this recovery of the sulfide material at Nyam compare to other deposits within Enchi, or do we not know that yet?
Well, a lot of the network that we've released to date and that you and I have talked about in the past has been focused again on the oxides, column tests that have had 90 to 95% recovery, so very good recoveries within the oxides. But this again is another step forward from an overall project perspective, because we've now done some testing of the sulfide material. So as you've highlighted, 91.7% recoveries, very good recoveries within the sulfide material. So that again is very encouraging and moves it further towards being a mine as we continue to de-risk the met work across the project. So from that perspective, we are very busy continuing to do met work. We've got a number of column tests that we're doing on additional areas across the project, as well as a couple of bulk samples. And then we're also, on the back of these sulfide met results that we've put out, we're also going to do additional test work on the met within the sulfide mineralization. So those are, very important kind of de-risking steps, and something that we see creates a lot of project value. And it's also something that, we discuss with a lot of different groups who are, looking at the project, interested in the project, who've seen what we've outlined within the oxides, but like to, have a better sense of what the sulfides, potentially look like from a production perspective as well. So again, it's a de-risking for us.
Yeah. Your Vice President of Exploration, Greg Smith, lovely chap. He's getting a couple more holes there in Nyam because you're seeing something there that you want to follow up on. Can you kind of expand that for us and really what these, it's like, I think 5 holes testing down dip.
Yeah, so if you look at some of the cross sections that we've put out in the press release, we've put a illustration out there that kind of highlights where we've identified a couple of high grade chutes that plunge at depth. Within our corporate presentation, we've also put out a long section that ultimately, compares our project to other greenstone hosted deposits along trend from us. And again, it's illustrating how these these shear zones are plunging at depth, and we've identified a couple of these higher grade chutes. So one of the key things is that they do remain open along strike as well as at depth. So it is a matter of continuing to step out and look to ultimately chase these veins, which will then ultimately grow the overall size of the resource over time.
Okay. Outside of Nyam, or maybe is there anything more we need to know about Nyam now going forward? I guess I'm just curious. The Enchi project is very large. You got a number of deposits you've been working on. I guess what else are you testing this year other than Nyam?
So we're doing a bunch at the moment. We're doing a bunch of trenching work across the project, identifying other targets that we'll look to drill in the future. On the back of the resource that we put out, as well as these recent drill results, we are evaluating additional drill programs, which we'll look at deciding on. Where the best use of capital is from a drilling perspective. We're then in the process of looking to complete an environmental and baseline study. That's one of the key things that's required for a mining lease. Our view is that we can get a mining lease within 12 to 18 months, and we think that would be a significant de-risking event for the company. So that's something that we're busy working on. As I mentioned, we're doing a lot of additional met test work as well. So we've got a number of things that we're working on at the moment, as well as internally we are doing a full update of our PEA, inputting a number of the new resource numbers internally, and looking at whether it makes sense to push that forward with a full update to the PEA. So those are a number of the initiatives that we're currently working on to ultimately create shareholder value and de-risk the Enchi project.
Okay. I want to ask you about management right now in this market. You did go out and you raised $5 million earlier this summer. I participated in that private placement. And, tell me as a shareholder and other people listening, about how you are really managing capital, knowing that it's tight right now. We all know where the market is, but you continue to progress Enchi as best as you can. How are you mitigating your risks as management here while also continuing the work here, Luke? I think this is a really important question, and a lot of people are having to answer the same thing right now. So what's your stance?
Yeah, it's always a balancing act. I mean, at the end of the day, management and board, we own, over 20% of Newcore. This past financing, the entire management team, as well as the bulk of the board, participated in the financing. So we are continuing to invest alongside you and alongside other investors, which I think is important. So we really think as shareholders and take dilution very seriously. So our view is that yes, raising money at 15 cents a share and does create some dilution, but the benefit of being able to continue to move the project forward, continuing to de-risk it, is something that in the hopefully short term, but in the mid to long term will ultimately pay off when the market does return, because all of that project value that we're creating through drilling, through test work, through updated economic studies, applying for mining licenses, all of those things de-risk the project. And then, when the market does come back, that should get reflected into the share price and ultimately re-rate the stock a lot quicker than you would see other stocks who, or other companies that have ultimately been forced to go into hibernation mode and sit on their hands because capital has not been available to them. I mean, I'm hearing, from a number of investment banks that there's, dozens of companies lined up looking for money, and there just isn't any capital available. We're in a fortunate position that, again, management and directors, we continue to invest in the business, as well as we've got a great institutional shareholder list. We've taken that from 40 to now 45% institutional ownership. We've added a couple of additional tier one investors to the share register who, recognize the value that there is within the project that is not currently being recognized by the market, as well as our existing shareholders who've institutional shareholders who funded the company for the last number of years, who again recognize that all of the work that's been done on the project is currently not being reflected in the share price. And for them, it's just a matter of waiting it out and ultimately seeing that re-rate in the future. So that's how we're kind of managing it. We are very conscious of costs, so we're doing as much work as possible that doesn't cost a huge amount of money, but does add a lot of project value.
You've sat in that investment banking seat before in different cycles. How does it feel what's the difference here between that seat and the CEO of an exploration during this time in the market?
I think at the end of the day, I mean, when you're the CEO of a junior gold exploration company, you're at the pointiest end of the equity capital markets. And I think it's important to kind of recognize that it is a very cyclical business, and that, and that we will see, tough times, but when good times return, then they can be then they can be phenomenal. One of our large investors said to me once, he goes, Luke, you guys have delivered on everything you said you would, and at the end of the day, stocks will go up 400% and they'll come down 80% for no other reason than market sentiment. And I think we're in that segment of the market where, the entire sector's off, 50 to 80% on the back of market sentiment. But we could turn around and in 3 months from now, the sector be back up, 200 to 400% on nothing more than market sentiment. And back to the point about us continuing to add project value and doing work, we would like to think we'd be in the 400% camp and not the 200% camp, because people will, dust off their notes and see all of that project value that's been added and start buying the stock from that perspective.
I'd love to see a 400% move in NCAU. That'd be grand. In fact, let me give you a shameless plug. An old friend of yours is actually going to be the guest on this week's Long Forum. Your pal Simon Catt is going to talk about the investment banking side in this sector during this market. So you maybe give him a plug and tell him that he better watch out, because Mining Stock Daily is coming after him with hard questions. So.
Yeah, good. Well, make sure to say hi to him. That should be a very lively discussion, I'm sure.
Yeah, it's going to be great. All right, Luke Alexander, thanks so much for your
Trevor,
time.
Trevor, the only other thing is, you're kind of asking about, markets and investment banking hat and all the rest of it. I think the other thing to, to potentially touch on is, if we look at the valuation of Newcore today, we're trading at about $8 per ounce in the ground. And, that's for ounces in a tier 1 jurisdiction. Ghana is a great place to operate. You've got 3 of the top 10 largest gold companies on the planet. So it truly is a tier 1 jurisdiction. So $8 an ounce for a tier 1 jurisdiction, as well as, the fact that we've de-risked the project by wrapping economics around it. We've put out a PEA that outlined very robust economics, at 1650 gold, after tax NPV of $212 million. We're trading at about $13-14 million US today. So we're trading well below 0.1 times the NPV of the project. So, in this, part of the market, value investors are stepping in, and that's who's starting to buy the stock. But, again, you could easily see the stock double or triple, and there's still a huge amount of value sitting there on the table. So again, we put more money in at 15 cents alongside you and other investors. And when I look at it, those are some of the metrics I look at, is less than 0.1 times the NPV of the project for a very low capex project in a great jurisdiction, and $8 per ounce in the ground. So touching on valuation and looking at some of those metrics, I think is important as well.
Yeah, well, and let me play a little bit of devil's advocate just for the sake of doing that, Luke. You stated some of those economic numbers there, but that's not just Newcore. You have a number of peers that could say the exact same thing about the valuation, their current valuations. Is it easier to say that when, market's good, but when markets are bad, you use those as, those numbers in your communications to potential shareholders, but is it beginning to get really competitive because so many other people are in the same boat right now?
Well, I think at the end of the day, who's getting funded and who isn't getting funded.
This is true.
Again, there's a lot of companies out there, from what I gather, aren't getting funded. So, I guess that might be the ultimate, determiner of, which ounces are more valuable than others, is the ones that are able to get funded. And, at $8 an ounce, we've got new investors who are stepping in. We've got existing investors who are wanting to follow their interest and put more money in. So, again, $8 in a tier 1 jurisdiction, less than 0.1 times the NPV of the project, is very compelling. It's the reason I put more money in. It's the reason the rest of the management team put more money in. And, it's the reason the market has ultimately continued to fund the project, is because they recognize the value that there is within the project within the company that's not currently being recognized in the market. So for every investor, it's up to them to go and differentiate between the different companies and the ounces that are being valued out there. But again, I think at the end of the day, the market decides. And for us, we had an oversubscribed deal within 2 hours of launching it, because I think there is a recognition that this is a standout project that will, re-rate once the market does come back.
Okay. All right, Luke, thanks for your time. Appreciate your the answers to all these questions. Look forward to seeing you in a month's time. And I think we are set up to catch up again at Beaver Creek. So have yourself a good couple of weeks, my friend.
Thanks a lot, Trevor. Great to see you, and thanks for your continued support.